For hours, many founders, investors that I've talked to have been desperately trying to get their money out.
Our banking system is in a fundamentally different place than it was, a decade ago.
Many economists are now asking if Fed will hit pause on further rate increases.
The question now, though, is whether the collapse of this tech-friendly regional bank is the start of something more serious, or just what happens when higher interest rates give companies less room for error.
Hello everyone, hope you all are well. As you know, the banking condition in USA nowadays is very bad. First Silicon Valley Bank and now 186 banks are at a risk of failure. First, let us discuss about the Silicon Valley Bank collapse. Silicon Valley Bank, once a prominent player in the banking industry, collapsed after struggling to cope with the rising yields and eroded the values of its assets. The bank was shut down by California regulators last Friday, and the Federal Deposit Insurance Corporation (FDIC) was appointed as a receiver. This makes the largest bank failure since the financial crisis of 2008, when Washington Mutual went bust. Silicon Valley Bank attempted to recover from its losses by selling a portfolio of treasuries and mortgage-backed securities to Goldman Sachs at a loss of $1.8 billion. However, it failed to raise $2.25 billion in common equity and preferred convertible stock to plug the hole. The bank clients become increasingly worried and withdraw their deposits, causing $42 billion in outflows in just one day. In an attempt to salvage its businesses, Silicon Valley Bank announced earlier this week that it was exploring strategic alternatives for its holding company SVB Capital and SVB Securities. The company said that SVB Securities and SVB Capital and general partner entities were not included in the Chapter 11 filing. The company added that it planned to proceed with a process to evaluate alternatives for its businesses, as well as its other assets and investment. Now, let's discuss why now another 186 banks are collapsing in the same way the Silicon Valley Bank. A new report was found that 186 banks in the US are at risk of failure due to rising interest rate and high proportion of uninsured deposits. The research posted on the Social Science Research Network titled Monetary Tightening and US Fragility in 2023 mark-to-market losses and uninsured deposit runs estimated the market value loss of individual banks' assets during the Federal Reserve's rate increasing campaign. Assets such as treasury notes, mortgage loans can decrease in value when new bonds have higher rates. The study also examined the proportion of banks' funding that comes from uninsured depositors with accounts over $250 billion. If half of the uninsured depositors quickly withdraw their funds from these 186 banks, even insured depositors may face impairments, as the banks would not have enough assets to make all depositors whole. This could potentially force the FDIC to step in, according to the paper. However, it is important to note that this is research-based does not consider hedging, which may protect many banks against rising interest rates. Even if only half of the uninsured depositors decide to withdraw, almost 190 banks are at a potential risk of impairment to insured depositors, with a potential of $300 billion of uninsured depositors at risk. If uninsured deposit withdrawals cost even a small fire sales, substantially more banks are at risk, the report noted. The failure of Silicon Valley Bank serves as an example of the risk posed by rising interest rate and uninsured deposits. The bank assets lost due to the rate increases. The worried customers withdraw their uninsured deposits. As a result, the bank failed to meet obligations to its deposits and was forced to close. The economists who conducted the study warned that these 186 banks are at risk of similar fate without government intervention of restructuring. The findings underscore the importance of careful risk management, and diversifications of funding sources for banks to ensure the stability in the face of market fluctuations. Now, in these situations when all the US banks, not all, most of the US banks are collapsing, now 186 banks, previously Silicon Valley banks, the Indian peoples are questioning Hindenburg and Soros. All you know, George Soros was a billionaire who marked a question against India and Indian government regarding the Hindenburg issue. Hindenburg also makes a report about Adani crisis. Let's discuss about this news. George Soros, where are you? Billionaire get told for slamming Adani, missing Silicon Valley bank crisis. So it is an interesting story, and I hope all of the Indians should ask these questions to the US or George Soros like billionaire to concentrate on their own problems rather complaining about India or Indian government. Let's discuss this issue. The Hindenburg Research and George Soros, who accused the Indian government for facilitating fraud at Adani Group, are getting told for missing the banking crisis in the US. Two US banks, Silicon Valley Bank and Signature Bank, have collapsed, and many more are feared to be heading in their directions as a trust of investors in regional and smaller banks have been shaken in the wake of quick meltdown of Silicon Valley Bank. As the crisis unfolds in the USA, many of the Indians are asking the same questions: is that Hindenburg and Soros could not see what was hitting the Americans? In January, US-based short seller Hindenburg published a report on Adani Group, and Soros picked up the allegations to target Prime Minister Narendra Modi. Soros, who is accused of funding groups to bring down the governments he does not like, said Adani crisis would spark a democratic revival in India. And now, in Twitters, there are some famous comments are going on, some famous tweets are also going on. Let's discuss some of the tweets. I hope these are the main questions we also Indians are asking the George Soros and Hindenburg. First comment was from Mira Singh. He is asking, Hindenburg was not being paid by George Soros to alert the US banks. Perhaps Soros paid so much for too little to Hindenburg and Bharat Tere Tukre gang because Adani is getting and no bank of Bharat collapsed because of him. Now, the second was from Jagnish. George Soros, where are you? Talk about Silicon Valley Bank. Will you scratch only Indian nose? Check your back before search others. Next from Pradeep. These are Hindenburg, BBC, George Soros are international blackmailers, but they must stop. This is New India under leadership of Honorable Prime Minister Narendra Modi ji, who is the master in dealing with such conservators. Many international outfits are frustrated as unable. Hindenburg, in his report published in January 24, accused the Indian government and Adani for manipulations, accounting fraud. The report has creating impact on Adani groups, and as you know, 85% of the share value get down. But now the situation has become better, and every day some of the Adani group stocks are getting market value. Some financial experts are urged behind for Adani, and now the Indian investors are asking short sellers and those who laid it on the report for better focus on US banks.